We are rolling into the mid-afternoon on Wall Street, and I'm Grant Mercer with Storm Stock Solutions. Let's bring some clarity to the chaos in this hour of trading. The tone right now: indices are relatively steady, but under the surface you've got a mix of wild single-stock action and big-picture worries about the dollar and global purchasing power. The biggest news storyline on traders' screens this hour is Infosys. According to reporting from MarketWatch, the stock suddenly surged about 50% earlier today before cooling off, setting off a wave of speculation across the street. Moves like that without an obvious catalyst get everyone asking the same questions. Was this a fat finger order, some kind of algorithmic misfire? Or did news leak somewhere the market hasn't fully processed yet? For short-term traders, the focus now is on liquidity, volatility, and whether the tape stabilizes or we see another air pocket into the close. Alongside that, there is a more strategic conversation building around the US dollar. MarketWatch columnist Charlie Garcia is highlighting concerns from readers about dollar weakness and China's challenge to US currency dominance. The key point: when the dollar loses global respect, American consumers ultimately either buy less or pay more. That theme hits everything from imported goods and travel costs to the profitability of multinationals. Macro-minded investors are watching FX closely here, because sustained dollar weakness can reshuffle sector winners and losers over the next several quarters. Meanwhile, in megacap tech, Alphabet is still in the spotlight. As MarketWatch notes, prediction markets on Polymarket now show Alphabet's odds of being the world's largest company at the end of next year running nearly neck and neck with Nvidia's. That doesn't guarantee anything about fundamentals, but it does show where speculative capital thinks leadership could shift within the AI and cloud ecosystem. Traders will be watching whether that bullish sentiment translates into real institutional flows into the stock as we head toward the close. In the background, there's a cluster of personal finance and tax stories that don't move the S&P in a single afternoon, but matter for how investors position themselves. One new MarketWatch column profiles a 63-year-old with roughly $6 million in stocks, heavily concentrated in Apple, worrying about getting punished on taxes. Another piece looks at couples in their 60s sitting on seven-figure IRAs and debating whether they can afford to retire without leaving much to the kids. These articles are reminders that concentration risk, tax planning, and withdrawal strategies become front and center when portfolios get large. Issues long-term investors and advisors track even if day traders don't. You've also got year-end tax moves back in the mix, with MarketWatch outlining strategies that could lower tax bills and potentially enlarge refunds, plus separate guidance on smarter charitable giving than just cramming donations in before December 31. For professionals, those stories are a nudge that client behavior, cash flows, and risk tolerance can change around tax season, and that can feed back into markets in subtle ways. Into the next hour, I'll be watching whether Infosys stabilizes or if that earlier spike sets off more volatility in other ADRs and emerging market tech names, and whether the dollar narrative starts to bleed into sector rotation, especially into sector rotation. Multinationals, commodities, and travel-related stocks. I'll also keep an eye on how Alphabet trades as that prediction market buzz circulates through the options pits. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.